Welcome to the Explainer. The AI and crypto markets can feel like pure chaos, but what if I told you that beneath all the noise, there are actually clear signals telling us where things are headed? Today, we're going to decode them together.
So let's just start with this one big idea. What if all the crazy price swings, all the hype, all the drama, what if it's not random at all? What if it's actually a message?
Because it is a signal. And today, we're going to put on our analyst hats and decode three of them. Three crucial events that I think cut right through the confusion and give us a peek at what's really coming next.
Okay, our first signal comes straight from the front lines of a new kind of war. This is the battle for the future of AI. And we're not just talking about who has the better chatbot. This is a fundamental fight over who will control the very foundations of artificial intelligence.
And really, this whole conflict boils down to two completely different visions. On one side, you've got the giants like Anthropic, and they're building this perfectly controlled, walled garden for AI. It's a clear play for total control. And on the other side, you've got the decentralized dream, a project called TAO, which is, well, having a bit of a meltdown. So what happened? Well, it all started when a key founder just dumped $11 million worth of tokens on the market. That one move set off a chain reaction, a domino effect, with other projects running for the exits. All told, it created over $20 million in selling pressure. I mean, it's a textbook governance crisis for a decentralized network.
But here's the kicker. This is where it gets really interesting. Look at the data. As the price of TAO's token was tanking because of all the drama, the market's excitement for the idea of AI agents, AIs that can act on their own, that actually shot up by 28%. The project went one way, and the big idea went the complete opposite direction.
And what this shows us is a huge leap forward in how the market thinks. Investors are getting way more sophisticated. They're actually learning to separate a single, risky project with messy politics from the promise of the entire technology. They're selling the drama, sure, but they're not selling the dream.
All right, let's move on to our second signal. And this one is a bit of a thriller. It's a cautionary tale about the very real dangers that are still lurking in the wild corners of decentralized finance. So this whole mess started with, of all things, a thinly traded meme coin. Seriously, called FART. Because almost no one was trading it, its price was super easy to manipulate, and that's exactly what happened. That manipulation triggered a $15 million liquidation event that was so fast, so sudden, the platform it was on, Hyperliquid, it just couldn't keep up.
And the damage? A cool $3 million in bad debt. And here's the thing, that wasn't a loss for the platform. No, that was a direct hit to the everyday users who were providing the liquidity. They got punished for a risk they literally could not have seen coming.
This whole episode was a painful but absolutely necessary wake-up call for the entire space. It's forcing platforms to ask a really tough question. What assets are actually safe enough to use as collateral? The big lesson here is just because you can list a token doesn't mean you should. Okay, so we've covered a war for control, and we've covered a multi-million-dollar disaster. Let's switch gears. Our third and final signal is a much more optimistic one. It's about how, underneath all that noise, the actual blueprints for a new economy are being laid right now as we speak.
So first, we got to talk about this thing called fully homomorphic encryption, or FHE. And look, this is basically the holy grail of data privacy. Imagine being able to analyze super sensitive data, think financial records, medical files, without ever having to decrypt it. The data stays locked up and secure the entire time. And get this isn't just theory anymore. A company called Zama just launched the first ever production-grade app using this technology. This is a huge deal. It proves that this idea of compliant privacy is finally a real thing you can use.
Now, at the exact same time, another piece of the puzzle is quietly clicking into place, and it's just as big. A brand new payment system is being built from the ground up specifically for AIs to pay other AIs.
It's called x402, and just look at these numbers. It's already processed 140 million transactions, settling over $43 million. I mean, it's growing so fast that a massive player like Coinbase is now including it as a payment option, right there next to giants like Stripe and Visa. That's the ultimate stamp of approval.
So, let's take a step back. We've looked at an infrastructure war, a system-wide risk event, and the quiet birth of some incredible new technologies. What happens when you put all three of these signals together? Well, a surprisingly clear picture starts to form.
Let's just break it down.
The AI war tells us the market is getting smarter, it's learning to tell the difference between hype and substance. The liquidation crisis, that shows us the system is learning some tough lessons and getting safer. And these new technologies, they show us that the future is literally being built right now.
So when you put it all together, the takeaway is pretty clear. This isn't just random chaos. What we're watching is the messy, sometimes painful, but honestly, incredibly exciting birth of a whole new economy, one that's learning from its mistakes and building some ridiculously powerful new tools.
And that leaves us with one last massive question. The building blocks, the privacy tech, the payment rails, the market intelligence, they're all starting to fall into place. So the real question isn't if the future will be built, but who is going to build it and who's going to control it.